If not this year, then there will never be a perfect time for you to start trading. 2022 was an awful year for the stock market, with the S&P 500 down 19.5% and the Nasdaq even 33%. Many expect this year to be just as terrible as well. However, this simply isn't true, at least not for the traders. I promise you there are plenty of good reasons to be excited about all the volatility in the markets that you are seeing right now this year. So if you've been thinking about starting and learning to trade, the best time to do so is right now. And it's my job as your trading buddy to teach you why and show you how. Welcome back to another Humble Trader video. If you're new to my channel, welcome. My name is Shay, the Humble Trader. I've been day trading for over 8 years now. And in the trading world, some people would call me a grandma, which is extremely rude because 50 isn't even that old. All jokes aside, I'm here to teach you a no BS approach to trading with actionable tips and strategies in each video. So if that sounds good to you, then please remember to smash the like button and hit subscribe. Each like goes towards my pension fund. I know the headlines are really gloomy in the market at the moment. Earnings are contracting, recession fear looms over us, and it feels impossible to get excited about putting money in the market right now. But that shouldn't stop you from learning how to day trade. When the market is in a downturn, all you need is a shift in strategy and the right resources. Don't be fooled, there are some great opportunities in this market. You just have to know where to look at it as a trader. So in this video, I'll be showing you 5 reasons and strategies on why it's a great time to start profiting from the market this year, and exactly how to do so step by step. The first reason why you should start trading this year is that it's never been easier. You can access so much free education online, and the software and market tools are more sophisticated than they've ever been, and it's only getting better. With the advancement of technology, us traders have access to a wealth of information and tools to help us make informed decisions and research. This includes real-time market data, advanced trading software, and algo trading. And some of these amazing tools are free for you to use. Make sure to check out TradingView for online charting, Weibo for pre-market screener, and Finviz for your research. Some of my personal favorites are scanning software that pick up the hottest stocks that are gapping up, as well as news research platforms that allow you to read the news instantly, faster than Jim Cramer. There are also many education resources available for you to learn about trading, whether it's paid or free, such as online courses, books, webinars, and so much more. Free resources are great for new traders to get started and just explore if trading is the path that you actually want to go into. That's the reason I have a long video playlist here for beginner traders, teaching you how I would personally restart all over again with picking platforms, risk management, and my trading strategies. I really wish I had these resources in such detail when I first started 8 years ago, so make sure you really utilize my videos and learn from them. Next, we're gonna talk about broker accessibility. There's so many online trading platforms for brokers now, and it's so easy for you to get access to these tools to start trading and accessing market data without the need to have pre-existing knowledge or a lot of experience, or a lot of capital to start with. Okay, what I'm about to say is going to date me so much, but when I first started learning about the market more than 8 years ago, most brokers require $2,000 to $5,000 initial funding in order to get a margin account, or even just to open paper trading account. Nowadays, you can open an account for as little as $100 or less. By the way, I'm not suggesting you to open an account and start live trading with only $100, but sometimes you do need to put some money in the account in order to activate paper trading and see live market data to start practicing with. Besides a lower barrier to entry in terms of account minimums, nowadays the commission fees are extremely discounted. You can trade on interactive brokers for only $1 per trade, or trade on advanced broker platforms like Centerpoint Securities and actually get rebates on certain routes. Basically, you are getting paid to trade. Of course, there's always the $0 commission trading that we talked about as well. While I'm not a big proponent on using these free commission apps or platforms to actually day trade live, I think using them for swing trading or investing, that's totally fine. One of these $0 commission trading broker is Webull, and this is a broker that I personally use myself on my phone on the go. Back to trading. Now, as a disclaimer, before you get ahead of yourself and start spending your hard-earned money, I want to encourage you to start with paper trading first. I do not recommend newbies to start with real money. Always start with paper trading first. I list a bunch of great paper trading brokers in my other video as well. My second reason why you should start trading this year is the same reason why some people might tell you, don't trade. And that is market volatility. Bear markets are characterized by increased volatility. And while some people say that's a really bad thing, well, it's because they're not traders. Investors often want a calm, steady trend up, slow market. However, as traders, we thrive from volatility day in and day out, whether the stocks are flying to the moon or crashing to the ground. Extreme volatility presents really good opportunities for traders like you and I to profit from. As traders, we make money from big ranges per share, not in a long-term percentage gain. Let me show you an example right here with the stock Nvidia, which is a very volatile stock. So investors may hate it when the stock opens with a gap up and then sell off to go green to red and then go to new lows to 266. So that's really volatile range. You can see slowly and steadily it faded lower, bounced a little bit right here, and then faded even lower into the close at 263. This is a lot of intraday volatility, and investors hate it. But for traders like you and I, this presents a great opportunity to profit on. You can short off the open on this overnight gap up into the prior day's close range. We're talking about $3 per share. And then if you short it all the way back down, you can look at the daily support around this 266's area right here, daily support, and look for a bounce move. This is a bounce that's like $2, $3 from 267 all the way to 269. So that's amazing range to short and long to profit from, which I personally took today. And on only 100 shares, that will be $500 on the day potentially. On 1,000 shares, that's around $5,000 if you're a baller, and vice versa. As stock prices fluctuate more widely throughout the day, there's going to be opportunities for traders to profit from, long or short throughout the day, as long as there's range, like Nvidia, and volume. Now traders, if there's a stock that you think has a lot of potential, a lot of range and volume like we just looked at, please share it in the comment section below. I know everyone could benefit from this knowledge. Okay, now that you know how to trade volatile stocks and take advantage of the range, this brings me to the third reason why this year is a great time for you to start trading. This is the best time for you to start making money from short selling stocks. A quick 101 for my beginners here. Short selling involves borrowing shares from a broker at a higher price and selling them with the hope of buying it back at a lower price and profiting from the difference. In a bear market, there's a lot more opportunities for short selling, as many stocks experience a long-term downtrending price movements. Now let's go over a short selling strategy that worked really well for you in a bear market. But before we do so, if you're enjoying the video so far, please remember to drop a like at the bottom of the video and subscribe if you want to learn more strategies like this in the future. I'll be making a lot more videos for you later on. So the ticker we're looking at in particular is one of my favorites to trade, on the long side but mostly on the short side, and that is Coinbase. And I picked this stock because of a couple of criteria that you should follow. First of all, the stock always trades very, very consistent volume. On a daily basis, we're talking about an average of at least 20 million shares per day. And the second criteria is that it has a lot of range. Like, on any given day, Coinbase is going to move at least $2, $3, $4. And on a big breakout day like this, this thing went from like $68 all the way to $84. We're talking about 20-point move, okay, on one single stock. That's only $70. So that's the reason you should be picking stocks like these that will give you a good range to profit from. So the reason Coinbase is on the radar for short is because it has a lot of resistance in the $70 range. Either from here, $70, and then also on the daily chart, you can see what we're shorting this day, which is April 12th, right? And the day before, the highs is around $72, right? So you have really defined risk on the short side. On this day in particular, we have CPI data announcement, and the stocks, everything rallied. But what I looked at is Coinbase went to test yesterday's higher day right here, pre-market, and started selling off. So that's the reason I'm leaning more short biased on this. I didn't capture the whole move, but when I see a daily rejection of that key level, which is on the daily chart, $72 here, that has me interested, right? So if I'm able to get in shorts around 72s and risking above that, maybe $1 on the upside, then the downside could potentially be really, really rewarding. So if that's an entry, that's a risk. You're risking $1 per share. Downside, you have downside to prior day's close. So that's $2 to a downside to $70. And next range later on is the lower of the day from the day before, $67. So we're talking about 3 more points to a downside. So that's $1 risk to potentially make $5 per share. So those are all the criteria for this strategy on the short side that we just talked about. Now let's move on to the actual executions now. So as you can see, I definitely did get in a little bit early on the pre-market trading. So yes, I definitely take some trades pre-market, but it will be very, very small sizes. Like we're talking about like a couple hundred shares on this. So, I definitely got in a lot later after the open here at $71. So at this point, 72 is right here, $72. That's going to be the risk on the day. If I got in short 71, that's the risk. So we're talking about risking $1 per share. So I got in here, I accidentally covered a little bit because I hit it a little bit too big. I was thinking, okay, you're going to retest a couple more times to that 71.40s. Then I'll start to slowly add into it. So that's the idea. But no, the stock just dropped to prior day's close. That's why I added $70. I never got a big size on this name. And I even added a little bit here on the weakness, which I was a little worried about, 69.80s. So at the end of the day, I only have 500 shares on this position with all the ads down here, 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 especially after I covered some here and here down here at $69, $30. And you can see I missed so much to a downside. After I covered at this $69 range, the stock consolidated, broke down to 68, bounced back to 69, and went to $66. So, even looking at this right now kind of hurts because I left a lot of money on the table. But, this will be a good strategy and a good stock to trade as long as there's, once again, volume, range on the stock, and also like the daily chart aligns technically with your short setup. And another criteria that I forgot to mention is a bonus criteria, is that when you're trading these like tech stocks that are really sensitive to the overall market condition, like Tesla, Nvidia, Coinbase, definitely one of them, you want to be watching the S&P 500 or the QQQ, both of these, and basically the indices, right? So at the time, I'm more convinced on the short side because the market was extremely heavy. If you look at the chart on SPY, very similar to Coinbase. At the open, the gap up just got sold into. But once again, I must remind you, there's no strategy that's going to be 100% working and successful all the time. Short selling isn't for everyone, and it really requires that you keep a really strict risk management profile. Again, I've done many videos on risk management in the past before, and I'll leave that in the link down below for you to check out after this video. The fourth reason why you should start trading this year is that there are so many opportunities to buy the dip. Okay, I know some of you must be thinking right now,
oh my god, Humble Trader, you just said this year is a good time to short sell stocks. Now you're telling me we should buy the dip? Make up your mind.
believe it or not, there's actually good opportunities to profit long or short in all market conditions. But what changes is the timing. And in a bear market, your timing to long stocks in a reversal needs to be very precise. Buy the dip means you're buying stocks or other securities when the prices have dropped, with the expectation that they will eventually rise again later on for you to make a profit. Bear markets can offer some of the best buy the dip opportunities that you'll ever see in your trading career. And that's because the phenomena that causes panic and all the emotions are typically short-lived, at least intraday, and the market often really quickly recovers for short-term traders. So despite what a lot of people may say, in bear markets, rallies still happen and they're actually stronger. So you want to make sure you ride them to the upside. The key is to watch your timing, and when longing these reversals, you have to be very precise and following trend lines. So back to the stock Nvidia, in which we talked about earlier, and you see the demo that I did long the bounce on Nvidia. And what I did is I longed around the 266s, 267s area. And why is that? Well, this is where the daily support area is. I know at the end of the day, the stock ended up selling a lot lower. You can see it went all the way to 264. But again, when you long these bounces, you're not holding for the moon. You're holding for $2-3 bounce. On 100 shares, that's $300. On 1,000 shares, that's $3,000, and vice versa. So here are some of the key criteria. Remember, you must be entering at daily support area right here on Nvidia around 267, 266, big range stock. That's the first criteria. Number 2, it needs to be gapping down and selling off on really high volume, which Nvidia or Tesla or Coinbase, like you saw earlier, they all trade really high volume. And number 3, you should be waiting for the golden reversal time. Now, what does that mean? We talked about this many times before on this channel. This is the importance of watching and timing your entries on the long side when you're waiting for a reversal, a bounce, right? So you want to see a stock sell off all the way straight down from the highs, which is 274 that you saw earlier, all the way down to 267. I mean, we're talking about almost a 20-point downside move, right? And then you want to wait till around 10 o'clock, 10:30, that range. Sometimes it could be 10:30 to 11 range, and time it for the bounce. So usually the bounce will happen around this range. I did get in earlier this morning at 10 o'clock, and I bounced it from 267 all the way to 268, 269 as you saw. But another bounce, the bigger bounce, happened right here at 11 o'clock. So this is the range we're talking about. It's not gonna be like exactly to the minute, but it's that range, that time of the day for the golden reversal time. So this is what we call timing your entries. You can see if you draw like an intraday downtrend, the stock around that time, not only did it reclaim over VWAP, that's this blue indicator right here, this curly indicator, and this downtrend, that's when it broke through over, 11:30 actually. 11:30, so you have a downtrend break, watch the trend lines, you have a downtrend break, and also a reversal over to VWAP area. And the volume was steady, holding steady as well. If you look at the volume at the bottom, that's when you have like a decent reversal volume. And that's, the buying volume is finally exceeding the selling volume. So that's how you time your entries. I didn't catch this one, but this one, once over 267s again, it bounced all the way to like 270s. Until end of the day, it's sold off. But once again, you're just looking for that bounce, $2-3 bounce. And this is the exact trade I took. You can see I didn't take the reversal at 11 o'clock, 11:40, but I took the reversal at 10 o'clock. Bounced it from 266 to 267, 268, and 268.50s. So traders, please remember, while most investors can only profit from a bull market, us traders who trade range and volatility, like we keep on talking about in this video, we can profit on the long side and the short side regardless of any market conditions. So we talked about the short selling strategy as well as the buy the dip strategy. If you'd like to also buy the dip, then make sure to comment below hummus dips because that's my favorite kind of dips to buy. And also like artichoke dips. Okay, let's not forget that. Hummus and artichoke dips, amazing. Okay, moving on to the 5th reason why this is a year for you to start trading. If you made it this far, this could only mean one of these 2 things. First, you already know that this is a year you should be trading, and you're just sticking around for my bad jokes. In that case, I'm flattered. Number 2, you are still not convinced, and you need another reason to take action. If you fall into the first camp, then good for you. Please make sure to keep me updated on your progress on my social media. I'm not able to reach all of you, but I'll do my best to respond. All my socials are linked down below. If you're part of the second camp, you're still not convinced you should start trading this year because you're like, well, Shay, it's a bear market and we're in a recession. Everything is so uncertain. I could lose everything. Let me tell you, I hear you. I felt the same fear over 8 years ago. But let me ask you this one question. If not now, then when? If you don't start now, when are you actually going to take action? There's that old age saying,
of course only I as a 50-year-old would understand,
today your wish started yesterday. 2020 and 21 were a huge wake-up call for many people who lost their job and were unable to work remotely in their career. Many realized the importance of having a side hustle or start developing another source of income. I felt extremely lucky that I had my skills in trading that I've been practicing since 8 years ago. If I was still at my 9 to 7 job in film and VFX industry, things would have gotten pretty bad. Maybe the extra skills or side hustle you need isn't trading, and that's totally fine. But just learn from these 2 terrible years and know that you should develop a backup plan. Having your 9 to 5 or 9 to 7 job as your only source of income isn't reliable. And let me be honest with you, there'll never be a perfect time for you to start trading. The risk of losing money is never gonna go away. That's part of the job. But you can determine how much you lose when you are starting out. That's why on this channel, I always preach to start small and start with paper trading and get familiarized with all the strategies and technical analysis without the risk of losing too much money. You should not be risking your entire $5,000 account as a beginner anyways. Risk only $5 or $10 per trade. Take that as market tuition. And remember, you have plenty of free resources or videos like the ones provided on this channel. The barrier to entry is so low nowadays. You can simply click a few links in the video description below and open a free simulated account with live market data for free. Remember, learning to trade means living a few months or years of your life that most people won't, so you could spend the rest of your life that most people can't. If you need more guidance, I have plenty of videos teaching you how to get started with the right strategies. Or you can check out our very structured educational program with pre-market trade planning, mentorship, and so much more in the Humble Trader community. Thank you so much for tuning in. I'm the Humble Trader, and I'll see you guys next time.